It's Thursday. That means it's legacy review day. Let's take a look at some correlations and legacy charts that are important for crypto, especially as we get bigger by market cap. And there are more and more legacy players trading crypto along with stocks, metals, equities, etc. So the VIX, the volatility index, popped up quite a bit this week. Can't really see it on the chart here, but it was above 20 at one point. It was a bit of a Evergrande contagion concern, apparently, with a risk-off catalyst mentality across the board. Things look much better today, sitting here at 44.5 and change on BTC, briefly tapped 44.9-ish as well. So it's a new day here this Thursday compared to last week, and correlations in general haven't changed much. We're still remotely positive with DXY, super negative with gold, positive with the 10-year note, still negative on SPX and NDX, and positive with Nikkei. So what we really don't want to see here is the DXY continuing its upward momentum. That paired with risk-off mentality, gold strength, depending on how these things play out, that's the worst case scenario for Q4. If you're like me and you expect Q4 to be decently bullish for crypto, you need DXY to stay flat or negative. You need this to fail. You need this setup that looks great, continues to look great to fail. You need this bullish TK cross to not mean anything, flat Kumo to not mean anything, the measured move of this pattern to not mean anything. It's got to not play out because I do not see a bullish scenario for crypto if this starts to pull up past 96. If it pulls up to 94, I think we're in trouble. We'll have a muted rally at best because there's likely other factors at play in that point in time. I mean, hopefully this thing just waits until Q1 2022 and goes to 96 plus then. Crypto does generally terrible in Q1. Maybe the last Q1 this year was an exception with DeFi exploding briefly for a few months, but I'll be perfectly fine with this being held down until Q1 and then crypto selling off after some euphoria bubble in Q4. So I'll continue to watch that. Gold had and continues to have a potential inverted head and shoulders, and you probably don't want to see this play out either if you're bullish crypto, because as much as we want to think crypto's risk off, it's definitely not. It acts as a risk on vehicle for sure, even though these correlations are negative now. For the most part, they're positive with stocks. So to me, that's risk on sentiment there in correlation form. And if gold is up, then that's generally risk off. So hopefully this, along with the DXY inverted head and shoulders, fails. Now we'll know how this fails, if it fails, way sooner than the DXY stuff. This is on the daily, DXY is on the weekly. Here's silver on the weekly. The ascending triangle, it looked really good. Definitely continues to break down, to not play out as expected. And this thing was in trouble, weeks ago, once it broke that support. So in the future, if you're bullish silver, then you want to see this pull back above the cloud on the weekly with a bullish TK cross. This will take probably another year, right? The thing with metals and legacy that most crypto people don't initially realize is that this stuff moves incredibly slow compared to crypto, which moves very quickly. Now, things that shouldn't move slow or shouldn't move fast but are is SPX and NDX are all over the place this week. Had a big down couple days, looked like the sky was falling, and then over the past couple days, massive gap up. Basically, we go from gap down on Evergrande risk off stuff to gapping up on Evergrande, being shored up debt wise by the Chinese government, at least partially. So this was looking like a potential just like die through the cloud, classic trend reversal type stuff, but it pulled back at the cloud. So right now it looks okay. This may continue to roll over the next couple weeks, but something to watch for is a bearish TK cross. If you get a bearish TK cross, it tells you, okay, the trend from the bullish TK cross is over. It doesn't mean this won't keep going. It just means, based on math, it's probably a good time to close any longs at that point in time. And then it may crisscross like it did here in October, November. Crisscrossed a couple times, had a W, and then win again. We may see that into Q4, I don't know. But what we don't want to see if we're bullish crypto is this breaking down significantly because it will drag crypto with it. So ideally, this either holds sideways or continues slowly. That's fine. But we do not want to see this breaking down. Same thing with NDX. Bearish TK cross pending. If this holds sideways, maybe even a head and shoulders into like 2022, right? The slower this does nothing, the better for crypto. We do not want to see this gapping down several days in a row. That's just not good for crypto stuff. I'm going to talk about Robinhood and Twitter today because they have both announced crypto policies, crypto-friendly policies. Hood announcing wallets and listings, and over the past couple days, they've actually done decently well for the first time since listing, really. This is like the exit pump, dump, more dump, and it's finally above the 30-minute cloud for the first time really ever since listing. It did have a somewhat of a triple bottom here, but if they saying they're adding more crypto stuff or adding, whatever, anything new is good. New and shiny is good. If the payment for flow regulatory threat disappears, that will probably be good for Hood as well. But it's an interesting one to watch in the meme stonk category, sort of a retail moth to a flame type trade, just like GME. I mean, this thing shouldn't be up here. Makes no sense, right? Fundamentally. They could announce sell-offs in their own stocks or I forget the term, but nevertheless, technicals look amazing to me. Triple bottomed twice now. It has a 4-hour Kumo breakout pending. If this low holds and it breaks 200 again, I like 250. It looks good. I mean, what are you going to do? Trade the technicals or pay attention to the fundamentals, or a little bit of both? This thing looks primed for higher highs. AMC, however, does not. AMC looks more murky, neutral, bearish, not above the cloud. No pattern here, just nothing. It had a mini ascending triangle that just failed miserably. And especially with Delta COVID stuff, this makes no sense being up here either. No one's going to the theater willingly for the most part who had been before in numbers that they had been before. So the fundamentals here don't make sense to me either. Doge and something else in the meme stonk category, which on the 4-hour has just gotten pummeled. And if this thing starts to turn up, I expect GME, AMC, and Hood to all be bullish together. This probably doesn't act on its own. And if this is bullish, alts in general will probably flip a little bit more bullish on the USD pair. Coin is completely in range bound hell here, back to previous levels of 230, 240, 250. This just is a no trade for me. Needs more time, needs more data. I think I'm holding some coin in a personal account, but if Q4 is bullish for crypto, coin will probably benefit from that. Now, if they get hit with some regulatory thing from the SEC, you're going to see that as an immediate effect on the chart, most likely. But otherwise, this thing should do well with the rest of crypto, as should MSTR, which is also in like this ranging limbo of nothingness. I don't see strength, weakness generally one way or the other here. It needs to get back above 750, 800, I think, to really be sure that this is back on trend in the bullish department. Just really has been unable to muster any continued bullishness since February, just like BTC. I mean, BTC kind of stalled out early in the year as well. So if Q4 is the quarter, then expect 800 plus for MSTR. Tesla continues to look like a rising wedge to me. They hold a bunch of crypto. It's the only reason I'm really talking about them. Rising wedge, bear div. The last bearish pattern descending triangle never played out. This looks more convincing to me than that even did. And everybody likes to argue with me that rising wedges are bullish, but I will never trade them as such. They will always be reversal patterns to me, because the mentality is you get people buying, buying, buying. They buy every dip. They buy every dip. They run out of stuff to buy, money-wise, capital. They don't have anymore. And then who's left to buy, right? Most normal people who trade don't like chasing stuff, right? Like stop entries are fine, but I think the reason why rising wedges generally break down is because people stop chasing and they say, okay, it's stopped going up now. I'm going to let go. And then the retail traders start to let go, and then this thing just falls straight back down to 630, for example. Definitely one to watch into Q4 as well. Square still looks excellent to me. They hold a ton of crypto. They sell a ton of crypto BTC wise. They're still in this downward RSI trend, which is interesting. So you could argue this is all bear divergence up here until this breaks the trend. But again, if crypto's strong, expect all of these into Q4 to do really well, especially because there are lots of legacy people who don't understand crypto, hate it, don't want to hold it, but they do understand the correlations between companies who are crypto friendly and their stock prices. And you know that's a big part of Square going to where it was. Even Twitter, which announced today that they are adding an NFT verification system and some Bitcoin tipping stuff. The technicals here look really good to me. It looks like an inverted head and shoulders mess, right? RSI is all over the place. This would be an all-time high above 75, I think. Trend, EMA wise looks fine. Tapped the 200 a bunch of times. So even this looks fine to me for bullish continuation all-time highs. And much to my surprise, the grayscale products, a few of them were actually positive on premiums today, which makes absolutely no sense to me, especially LTC at 9%. ETC even pulled up from negative 35 to negative 25. BTC's probably just going to stay negative until ETF conversion, if that happens. But ETH holding positive is somewhat of a sentiment indicator just across the board. People willing to go more risk on. At least that's my read on it, right? That might be completely incorrect, but if this flips positive, it tells me risk on sentiment is back, at least in the near term. And of course, we have the CME futures rollover this week, tomorrow. And in general, we see a lot of volatility around these dates. In general, the quarters or the biannuals are up or down only. This quarter, or this biannual, March 29, September 24, has been mostly down. It hasn't been perfect. Obviously, we had that big bounce in between this contract expiry. Now, this isn't a perfect science, but if anything, it tells you pay attention to these rollover dates because we usually have volatility, coupled with September seasonality, and there generally hasn't been a super bullish outlook for September. I think any of these buys here into Q4, again, if I'm right about Q4, any buys in September aren't going to matter going into Q4 if everything's bullish, right? So it's important to watch how we react late September into October for Q4. Last, I'll just mention the ETH fund and DeFi portfolio I trade for TechMe Capital and Enzyme.finance, a non-custodial portfolio management tool where you can send ETH or USDC or just watch what I'm doing. You can see everything, including AUM performance allocations, all of the various vaults I'm in here collecting interest, compound, Aave, Yearn, as well as the trades and the trades tab down below. That's all I have for this one. Like, dislike, comment, share, subscribe. Happy trading.